It's a crypto sniper. Yes, your winter time boy in the southern hemisphere, keeping it chilled. So this is Bitcoin on the bigger time frames. Whenever you're uncertain about direction, and a lot of people are uncertain about direction right now, some of the safest things you can do is to go up to the bigger time frames on your candlestick charts. So what everyone is actually saying, looking at this chart, is this is a bottom. We have bottomed, most people. Of course, you've had every on-chain analysis from all the pi, pure multiples, everything ringing, tinging, bottom. Key point though, that you have never experienced, and I've shown this chart before under the NASDAQ, so I won't be doing it again, but you have never experienced an event that has seen the major NASDAQ pullbacks. And unfortunately, Bitcoin is being categorized, whether you agree or not, as a technology. So it is a play. It's a high beta play on technology and the NASDAQ. And the last major pullback was the NASDAQ in the great financial crisis. The biggest one, of course, was the 2000 crash. Since then, actually, if you get the NASDAQ up underneath there, maybe I should just do it quickly for you. Since then, you have been in nothing but a reflationary from QE1 to 3 era and period. So if I put that in for you and we pull it through, and I think I've done this maybe only on the market sniper, so that is on the monthly. I'm going to put the top one on the monthly too, and you'll see that actually is only really quite recent. 2000, that's Binance, so it doesn't have the history. Let me go and put Bitstamp. Bitstamp doesn't have the full history, but it has a longer history. It has at least from 2012. So if we get this through, so that 2012 is under 2012, there you go, roughly there in between the two. You can see that actually, I'm going to pull this over a teeny bit, pull that over a little bit so that it's over there. In fact, no, the other way. We might have to take that margin away. What you can actually see from this, there the 2012 is under the 2012, that throughout this period, you have been in, and we'll go with the TG Pink, nothing but a reflationary event which had a blow off from the COVIDs. There's your blow off that took you to your 64.9k, and then your tops have coincided virtually perfectly. You even came in with quite a strong sell-off there that was just based on a minor pullback on the NASDAQ. Bitcoin is a higher beta. You have never seen the likes of the 2007 high into the 2009 lows, and you definitely have never seen technology deflate in a manner that represented the 2000s, where it came down into 2003, down, 79% and 56% drops. You have never seen the equivalent of that on the NASDAQ yet. Okay, so this is why Bitcoin, which has had a far more higher beta, see this non-stop long period here up to 2014. See how much that absolutely pumped Bitcoin. Then the deflationary spell into the low here just during this choppiness on tech. And then again, another major run up until that point there, around about the 217 highs. You can see there, NASDAQ continued a little bit longer, then it re-rated. That's how Bitcoin re-rated. You guessed it, 20K down to 3.2. That's some correction. So this is a high beta proxy. There was your 14K down to, in some instances, sub 4. And that was your equivalent move on the NASDAQ. So you get the understanding that unfortunately you can't remove this correlation. This is a higher beta version of that right now. So when you look at this candlestick chart, what I want you to think and ask yourself when you look at that Bitcoin chart is, am I looking at a bottom? So we take you back down into, say, that weekly view. Well, you've come off here, you ran your 24.5, you came down. You had another go, you made a marginally higher high, and you're spinning top. What has been happening on the dollar during this period? So let's just again have a look again at the dollar. Down below, we put, instead of the NASDAQ, we put the dollar. Again, another key correlation, risk on, risk off. You can't get away from it. I know it sounds a bit binary, and we're all supposed to be non-binary in this crazy world, but it is a little bit how the world has rolled. So if I then take this, we're on the weekly up top here, I'll put this at a lower level on the weekly as well. You can see how Bitcoin, from the COVID there, boom, that was the dollar being killed. So this is an inverse correlation. That was your dollar death right the way into the second dip W bottom there. And that was your pumpermentals into the head and shoulder. Then you came back as the dollar started to move. But then it went sideways for a while. You did the falling wedge. You had another go up. And this was just peak optimism, so that even while the dollar was grinding up, then when you triggered that inverted head and shoulder and you properly got motoring here, it has been non-stop pain for Bitcoin. So you triggered the inverted head and shoulder, you had a little flag, and then it's just been pain, pain, pain. Now you're getting a dollar pullback, and as a result, this is all you are able to manage. These tiny little spinning tops that have scratched and grinded their way upwards. And if you want to say bottom and you want to charge in, there's no one who's going to stop you. And if you want to say on-chain analysis, on-chain analysis, on-chain analysis is being dictated and dominated by macro. This is a macro event. Let me tell you, we've been warning guys that FX is the new crypto. You are going to see an Asian FX crisis against the dollar, in my opinion. Yes, it might be driven geopolitically, China, Taiwan, who knows. Hong Kong dollar peg failure, in my opinion. Whilst the USD JPY is pulling back at the moment, that'll only go so far. They'll be back on their yield curve control, which means buying their debt. So the big action is now happening in the giant markets. They usually move slow. They're like the massive giant tortoise that sits in the sun and does nothing for years. Then suddenly they get up and they start shifting. These are the quantum plates of the planet in terms of macro. Everything else sits on top of it and is much smaller and higher beta and bouncy bunnies. But when everything gets, when the earthquakes start to rattle and rumble, it's no longer about the bouncy bunny. It's about the entire foundation being shaken, and the buildings dance and everything else dances, including the bouncy bunny. So that's where we're at. So from my point of view, as best as I can, and people go, oh, you're gone all quiet and you know now Bitcoin's pumping and you're shut up and you're saying nothing. I haven't had anything new to say to my existing opinion. That is not a reversal. We're talking a lot about the other markets at the moment. That is where the action is. This is not pumpermentals. If you think that's a pumpermental, I'm afraid you've got another thing coming. Sure, if you want to drop to the 15-minute, could someone have made money on going long Bitcoin or Ethereum or some of the alts that have gone further? You absolutely could have, and you may have on the shorter time frame. Do I long-term make and build wealth trading counter trend on low time frames against the macro trend? Generally you don't, because suddenly something turns real nasty and it chucks it down real hard all of a sudden out of the blue, and there goes your little 15-minute setup. Align yourself with the stream. The stream goes from the mountain peak to the ocean. Guess what? You can, and there are quiet points where you can swim upstream, but it's not endeavor that ends up seeing you win races. Okay, so what else have we got to say ref the Bitcoin? So the other point that I want to make is your BTC dominance, because quite clearly during this period, Ethereum has now rallied back up to legacy areas where it has shown some degree of dominance. So maybe just before I go to the Bitcoin dominance, I'll show you that on ETH. So FD back to previous levels. This is the key point. Yes, it spilt and then it came around and it's pumped back up. And we'd warned that it would likely spill on our Twitter. If you're following us on the Twitter, on that broadening structure over here, we said we expect it to have a spill. Had a spill, found its natural level of 14% seems, and is rallying back up. This is heavy traffic area for it. That's why it spilled. It was in a broadening structure. It couldn't wind up to push higher. You've got your 20% level, which is a very significant level for Ethereum. You've spent very little time on the weekly charts above that. Next bull market, hey, no problems with thinking that that will indeed happen. I don't think Ethereum's going away. I think it might even have a stronger likelihood of existing and even surpassing Bitcoin, because it's going to be part of the apps, the surveillance finance, and the new system that the central bank controllers want. That is the amount of time in recent history, since the end of 18s, that Ethereum has been above the 20% level. And you are now getting that resistance wick. I should change the color a little bit over here, as you're coming up again to these core levels. So you've had a nice move up and then whoops, a little bit, check it on the downside. So it's going to be a little bit more choppy. So with that in mind, the easy gains on the rebound for Ethereum probably happen with all their news, etc., etc. But you would be in trouble potentially if you assume major moves further to the upside getting in at this point. If you got in earlier and you want to trend counter trend and you made some money on Ethereum, well done to you. I'm happy for anybody who makes money in this game. I just warn you that don't get positive enforcement for negative behavior, because you can give back even more, and as your confidence builds, you get bigger and bigger size and bigger leverage, and then slam. Everything you made times 3 gets taken out of your account, and that little bit of cheese that you were offered ends up biting your entire arm off later. So watch out. It's about habits and sustaining the long game. So we move to the Bitcoin dominance. Let's have a wee look at this one. So we warned before anybody else on dominance over here that you were going to have a surge of Bitcoin dominance when this broke, which it did, and it pushed up there, bang. Then we also drew this broadening structure over here. I'll just make that line a little heavier. And it's splitter, and said, look, it's going to have to square up and ease back down. That it has also done. So you broke out of your falling wedge, but this is also commonly referred to as a bit of a return move. So don't assume this just carries on down. Overall, the structure here is pointing to, in our opinion, and the maxis will love this statement, we don't give them anything just for the sake of giving them something. We just tell you what we think we see. And on balance of probabilities, we're often accurate, and we can also be wrong. So with that broadening structure, you had to square up and break that bagel line over there, which you have done. You maybe square up, and then you're probably going to start to get a bit of dominance and a push up around here on the Bitcoin dominance. So I would call this, for a period, a bit of circling up and potential dominance. Hello, boy. Do you want to come on Crypto Sniper video? Huh? Sheep Bear? I don't know if you can see Sheep Bear. Let's say hello to Sheep Bear. Sheep Bear. Sheep Bear. You such a mop head. How are you? Okay, that's enough doggy time for interval for the Crypto Sniper. Let's get back to what we're seeing here. So if we put this back on, just take the eye off and take that off. Overall, if I'm looking at that, that is not great downside continuation. If anything, I would think a possible bit of reversal. In spite of this selling off right now, in spite of the selling off, don't fall for the short-term momentum at the expense of the overall structure on the bigger time frame. Let me say that again. It's quite an important thing that I attempted to say there. Don't fall always for the short-term momentum against a larger structure on the bigger time frame. So don't be afraid to trade to a level. If this doesn't look like a continuation downside structure, then it probably isn't, even if right now you are going down. So that's having the balls to stand in and say, I don't know if that continues too much further. So without my falling wedge draws and scribbles over here, for me, this has been a period, and as I say, I don't feed Maxi's love and joy for the sake of it. I just tell you what I see. But that has overall low, marginally lower or equivalent low, marginally low or equivalent low, lower high, higher low, higher high. That dominance has now taken out that previous high as well as that previous high. This overall is what I'd call the watermelon smile, toothy grin indeed, and you've probably, but for that high, taken out all previous highs on Bitcoin dominance on that move. This is pretty low, but were you to base here, you might match or equal this low, and then I would anticipate some degree of move up. Again, you might get a smaller, it might not be as emphatic moves. You might get a smaller pullback to somewhere here, and then again, you might move up. But overall, this is looking like a period of Bitcoin dominance. How's the Bitcoin dominance worked for you? Well, as you can see, May of 2021 was peak Bitcoin and peak alts. And this was all good for the crypto market. So Bitcoin dominance heading down is generally, not absolutely universally, but generally on balance of probabilities, bullish. Unfortunately for you, this period since then, with hammering out lower lows, and actually this was distinctly bearish. This was the fall out of the flag that we had predicted, the last flag that you came down. So whilst you've been having this pullback and you've had a little bit of excitement on Ethereum, this is what I'd call localized news at a crypto level, with ETH pushing up a little bit, etc., etc., etc. All nice, love and light, etc. But generally, my assessment is I don't think this is going to continue too much longer. This does not look like a continuation pattern. It's a dangerous game, what I'm doing, calling reversal, but it's more out of experience. We also have the other structures that I've highlighted, the falling wedge squeeze, the break, and the return move. It's a fairly reasonable return move, it has to be said. It literally come back to source of break. So, you know, there's something going on there. I'd be a little bit shocked if this spilled out and zigged and zagged and carried on down. That would potentially be ongoing bull market. That's how I'd be wrong if your Bitcoin dominance runs this low, that low, but for a bit of zigging and zagging and continues down. That will likely mean strong alts and moderately strong Bitcoin. I just don't, as you're coming back into the thick of this zone, which has been a zone since 2021 at May. So again, I warn you, it's a bit like where Ethereum is right now, just assuming it's going to 25% ETH dominance, 30% during this period. I don't say it won't at some point in the future when we eventually get back some degree of bull power. But right now, I don't see that. So this is probably, in my view, going to slow down around here and potentially even bottom, even though there were some nasty rejections there. Bitcoin has not been particularly strong, and the notion the notion that all of this will, the alts will just keep pumping while Bitcoin struggles and fizzles indefinitely, is mainly a feature of the dollar. In fact, I ask you, whilst the dollar has been pulling back so hard, why has Bitcoin actually been so weak to the upside? Why has it been so weak to the upside? That is a question we should all be asking. There is, of course, the Bitcoin IXIC. Again, do you want to call that a bottom against the NASDAQ? So again, we've highlighted this. We were the first to be doing Bitcoin relative valuations to the NASDAQ. Now, a lot of people seem to have cottoned on, and we've warned many times, these were not points of bottoming. We had hoped for a bull market that it would hold these tweezer bottom lows. It smashed it to the downside. Do you think this now is bottoming? I ask you. You could draw either a rising wedge through the wicks there, or you might even be flagging it through there. It depends. But right now, Bitcoin is underperforming its category, whether you like it or not, as being categorized in that to the downside. And in fact, the key point that was very seminal here was it proved also that the 64 was the high. You might have noticed against the dollar, the peak points were actually the 64, the 69. They were going kind of against the trend, and there was a lot of retail momentum thinking that's it, 100 grand by the year end, 250 by the year end. Just dial max.kaiser.com and you'll throw out a fancy 6-digit number for you for the year end. And everyone was charging in, but you could see against NASDAQ tech, in actual fact, this was lower than that. So that was already showing a decay in the relative performance that many technical analysts might call a relative strength divergence. Again, I say a relative strength between Bitcoin and NASDAQ divergence. In other words, a marginally higher high, 69, which we teach you in HVF method, is actually a bearish construct. Traditional technical analysis says you go to new highs, it's bullish. We say no. Not if you reverse very close after the previous high and you pull back. It forms all sorts of structures that end up being toppy. It's much better you finish lower and you wind up and you create a new continuation. This, unfortunately, did not do that. As you can see, this was not, in the end, something we'd said it would have been nice to have been. And you could see this weakness in this flagging along here, coming here, and there was the big break, and there it came again to the downside. And I ask you now, while everyone is busy telling me how wrong we all are and how it's the worst call, and you get all the trolls trolling and all of that, do you want to call that a bottom? And I'm saying if you are, you're a bit premature and preemptive, certainly. And I can tell you there's a bit of wick selling across the top there as well. And you've got a very clear grind line. Again, I draw it for you over here against tech. You need, for Bitcoin to be in a proper bull market as the higher beta to the NASDAQ, you need it to be showing relative strength and going up more than the tech market, not less. Otherwise, you are still in readjustment downside mode. You may not like the news. I'm sorry. I'm going to tell you what I see. And that's kind of, it's kind of what we get from comments, as I say, on our profile. They don't concern us too much, but it's feedback, and it reminds me what retail is thinking when we're having a look at that. Let me just see if it is. I'm not even going to bother to get it. It's going to be a dig around. So there you go. Then I have a look at a couple of our favorite shorts. And you can see, yeah, alt, nice. Hammer, hammer, hammer. But how far do they go? Look at this candle. Bull market is back again. How would you not have thought bull market is back again at this juncture? Especially when this entire candle was green and the green candle was ending there before the pushback on that wick occurred. How did it turn out? If it ain't bottom for Bitcoin, it ain't bottom for your token, no matter how much amazing news. That was a strong hammer. That highlighted, and it got followed up by another hammer, and this was a look one way, go the other way. These are all actually quite bullish candles, and then they just started to get resistance here. So it's not running all the way. It's not running all the way, for example, on these jaws. So a little bit of a watch that one. EGLD, man, again, hammers along the low, but that's your basing ascending grind line right there. But you can also see wicks selling here, here, and here. And now you're on a small candle. So you go up a little bit and you go a little bit higher and you get a wick selling back down. You could set up a very sexy little rising wedge ready for the next slam and dunk. This was less flag and it was more squeezy, squeezy Japanesey, just like that. But boy, the end result was still down. That was a much more clear-cut reversal. Shoulder, low, marginally lower low, head, shoulder, low. Okay, we got something going. Break, trigger on impulsive. That was a reversal. It's not the same structure. It's not the same structure. You're looking at an alt here, but at the end of the day, Bitcoin drives the bus. He is the god market for crypto, and let me tell you, he's in a small bubble. There are bigger gods on the macro. So again, this looks promising for you, say on Tezos, but you can see it only goes so far. It's being bought up along the lows in this environment. And when you look also at volume should be part of what you do in terms of analysis. You are not getting over convincing volume. You want to chase that up on that volume? Good luck, man. There's a lot of wrecked little pippies that are at the bottom there. And this is a little bit of bot masturbation, cerebral fluffings, and a few minor players getting in there. This is not significant volume. So that's a couple of calls for you on there. And as good as ETH will look right now, and you'll call that a reversal, we would have also called this move up a reversal. Remember, I'm on log scale. It'll look even sexier maybe on a regular scale. You'll think, how can we go much lower? I don't think the problem is our grand macro. You might see something on the tech markets more similar to the two events I highlighted, the GFC crisis sell-off or the major .com re-rating. Remember, you've got this environment that supposedly the NASDAQ stock market is going up in. A non-recession by new definitions, which is not truly defined as fuzzy and holistic after the original hard definition saying recession. So the truth being is you're in recession and you've had a 3-unit interest rate hike. Yes, okay, it might have been 1 unit less than some people thought 100 was possible. But tightening interest rates kills stock markets, kills risk on. Tightening interest rates kills risk on. Let me say that one more time. Stock markets go down on tightening interest rates, especially when you're sucking liquidity and money and juice out of the system, especially even more when your central bank Satanists are actually saying to you, it's not really a recession, it's not really a recession. Why would they say that? Because they want to continue tightening interest rates instead of doing something different, like stopping tightening interest rates, like stopping QE withdrawal and reversal of quantitative easing, and maybe even cutting, and maybe even providing. And everyone is assuming and behaving as if QE is already here again, until they find it ain't coming near as fast as it used to come, and the guys are going to, under the guise of inflation, keep the dollar strong. And the dollar is having its pullback now. Bitcoin has done poorly during that period. It should be killing it on a softening dollar. As I've already shown you, Dixie's come down from 109 to 105s. That is big difference. Okay, remember, go to themarketsniper.com to check in with us and book a call if you would like to be part of our community. Building wealth, protecting wealth in reset times. It's not only what you make, it's what you get to keep. And a community of like-minded in the period of overreach governmental dark state era. The reset sniper times are here as well. Thank you for watching. We catch you later. I hope you enjoy the video.